About 15 days ago, I posted a tweet where I said, and I quote, "I want everyone who predicted in Q3 and Q4 of 2022 that the market would be crashing right now to admit they were equally as full of crap as the bulls who are always telling you that the market always goes up and you should buy now." And not surprisingly so, this tweet caused a lot of trauma with regards to the Toronto real estate community on Twitter. And guess what? I was accused of all types of things. All variations of pretty much the same message, that I am some sort of desperate real estate agent who wants to push up prices. And I cannot see, because I'm either malicious or too stupid, that there is an imminent crash coming to the Toronto real estate market nonetheless. Well, in today's video, I'm going to tell you why, in my professional opinion, there is no crash coming. And in doing so, I'm going to answer two questions in particular. Two questions posed to me as a challenge. Number one, is the Toronto condo market going to crash? And number two, this current resurgence we're seeing within the Toronto real estate market across all property types, and there's no doubt there is a resurgence right now. Is it, quote unquote, as the young kids like to call it, a dead cat bounce? We're going to cover that in today's video. Let's get to it. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, back with another video for you guys here today. It's been a while, I've been gone. I was on vacation for my sister-in-law's wedding, but now I am back ready to cover the Toronto real estate market. If you are new to the channel, on this channel we like to discuss all things having to do with Toronto and GTA real estate, market stats, market trends, buyer advice, seller advice, building reviews, pre-construction previews, area analysis, property tours, and so much more. So if you find this content enjoyable, but more importantly informative, feel free to subscribe, or you can get in touch with me with the contact information on the screen and in the description box. Now, in the original tweet, I think it's clear to most reasonable people, most reasonable viewers of this video, is that the point I was trying to get across is that both sides of the spectrum, whether you're talking about the unrealistic, unhinged real estate salesperson who's always telling you nothing is going to falter, real estate always goes up, you better buy now, if you do not buy now, prices are going to skyrocket and you're going to miss out. Well, those people are clearly unreasonable, and we all know that. However, there is a growing community within the Toronto real estate space, whether you're talking about commentators, agents, content creators, and all of the above, who have made a brand out of telling you the exact opposite. Market's going to crash. You're going to buy properties for 50% less. Property prices are going to go all the way back to the 80s. Condos are going to be worth $300,000 again. People are going to go bankrupt. Inventory is going to flood the market. There is going to be an imminent crash, and you better cash out now. Now, I won't name names, but there are popular accounts and content creators who have made a complete brand in absence of anything actual informative to provide in terms of analysis of purveying this very message. And in my opinion, both the bear and the bull, people who always are going to tell you that it's going to crash and people who are always going to tell you it's going to go up, are equally full of crap. And clearly, as we stand right now at the time of recording of this video, which is May 1st, 2023, we are almost through Q1 of 2023, and we are in the spring market. There were tons and tons and tons of people who thought at this point in time we would be in the midst of an economic collapse and crash of the Canadian housing market, of the Ontario real estate market, and obviously the GTA real estate market. And guess what? Well, guess what? Not only has this crash that many people predicted and many people made a name out of not happened yet, the exact opposite has occurred. If you've watched this channel for a long time, I've taken you through the market stats and trends week by week, day by day, month by month. We saw a massive correction to the tune of some areas 35%, other areas 18% to the Toronto and GTA real estate market after the peak market conditions of fall 2022, once the Bank of Canada started increasing interest rates and market conditions really cooled and halted bottoming out effectively around Q4 of 2022. Whether you want to pinpoint it at October, November, either of those months will do. Obviously, different property types had a different bottom and a different time. But since Q4 of 2022, right now as we stand May 1st of 2023, the market has seen a completely unbelievable resurgence. And something that I even underestimated. I thought the spring market would be much cooler than it is now. And clearly the spring market so far in 2023 has been absolutely on fire. Obviously, overall, not to the same extent of last year, but still far higher than summer and spring and winter of 2022. So is this resurgence a dead cat bounce? Which is a phrase I hate, and let me tell you why. Because I think it's another example of vocabulary, vernacular, the way we speak about stocks and stocks trading invading the real estate space. And we think of these things as interchangeable. Stocks and real estate, they're both vehicles for investments. They're both places where you can park your money, but they're not the same thing. And when we take the way we speak and the vernacular we use about stocks and we apply it to real estate without really thinking about what the definitions of those words are, we remain oblivious to the fact that definitionally, those terms don't really make sense within the context of real estate. For instance, let's take a look at the definition of a dead cat bounce. As per Google, when you Google it, the definition of a dead cat bounce is as follows: a temporary recovery in share prices after a substantial fall caused by speculators buying in order to cover their position. That is not applicable to real estate. Real estate, when you purchase your property and the value of the property declines, you cannot repurchase more of that very property. So that definition conceptually does not apply to real estate. Now, if we're to be a little bit more generous and use another definition of dead cat bounce. So the more favorable definition could be a dead cat bounce within the context of real estate are investors kind of taking advantage and being opportunistic to buy real estate at lower prices, in turn causing prices for a temporary short-term period to climb back up once again, but due to more macro and more prominent market conditions, irrespective of how many investors are buying at these lower prices, prices will nonetheless continue to decline. And this more favorable definition does apply to real estate. But it's not the case. But simply put, it is not the case. It's not what's happening right now. What's happening right now is simple. We are simply seeing seasonality return to the Toronto and GTA real estate market. Fall markets are, seasonally speaking, always hot. The peak market of all time happened to be last fall, and seasonality has returned amidst record low inventory. Right now, supply is dire and anemic. There's simply nothing good on the market for sale, and demand exceeds supply. And whenever something good to great comes onto the market for sale, it is gone after multiple offers. For instance, I just sold a penthouse property in Mimico with completely unobstructed Lake Ontario views and CN Tower views. It is a absolutely gorgeous, beautiful unit, 2+1 bedrooms with 3 washrooms, 1,200 plus square feet, a huge wraparound balcony. All you see is Lake Ontario in downtown Toronto when you walk in. And nothing else was on the market, and I managed to sell it for the second highest price ever in that building according to past MLS sales history. And I wouldn't be able to sell it for the price I did if there was more inventory on the market. So simply put, seasonality has returned. Inventory is very low, demand exceeds supply, and the Bank of Canada has been non-committal with regards to further increases of the interest rates. For the last 2 meetings, they have continued their pause. Now, in the next meeting, they're most likely going to increase it by 25 basis points, but the fact that the Bank of Canada has messaged this conditional pause amidst all these market conditions clearly explains to us why a resurgence is happening. So I don't call this a dead cat bounce, because that term, insofar as it is applicable, because that term has an illusionary connotation to it where it's not real, well, you can call it that. I simply call it a resurgence based on market conditions. Clearly, what's happening is real and due to real factors of supply and demand and interest rates, not simply people buying the dip. Which leads us to the second question. Is the Toronto condo market going to crash? Now, this was another question posed to me in response to that tweet. Many people obviously saying the answer is obvious. The Toronto condo market is unsustainable. It's going to crash, which I find funny, by the way, because one of my most viewed videos in the last year and a half is me talking about how Toronto condos are not good investment vehicles for investors who are very keen on cash flow. That was one of my most viewed videos. And let me tell you why the Toronto condo market is certainly not going to crash. First, we have to define a crash. To me, a crash is not a correction. There is definitely a possibility of a correction, but a correction is not a crash. Right now, as it stands, in the most recent month we have in full, which is March. I know this is being recorded May 1st, but the April stats have not come out in full. Literally the day after recording of this video, the April stats have indeed come out in full. So we have only March to go based on. And guess what? If I had April stats at my disposal, it would actually make my case stronger. And indeed, it has made my case stronger because in April, condo and home prices all have gone up month over month. Prices, I'm positive, have gone up for condos in April. Nonetheless, using March stats, the average sale price for a condo across all areas within the GTA is $705,000. In the 416, it's $732,000. In the 905, it's $650,000 or so. So what I would calculate as a crash is a 30 to 30+% drop in prices, let's say from this point in time, March of 2023. And a 30% drop based on average prices, let's take the 702 figure for all of Toronto and all of GTA. A 30% drop would essentially mean we would have to see a price of $490,000. So those who seriously believe the Toronto real estate market is going to crash, if they actually mean the word crash and not correction, are truly indicating to us that condo prices are going to plummet to the 500s on an average basis. If you think I'm being unfair with 30%, fine, let's say 20%. A 20% drop based on this average price would bring us to 560 across all condos in all areas. To me, that figure itself is argument enough as to why this is ludicrous. But let me actually put forth an argument, because I can't just tell you 560 sounds ridiculous. It's not going to happen, even though that should be enough for any reasonable person who actually works in real estate or knows anything about real estate. But let me actually put forth an argument. Toronto condos have historically shown to be the most stable, not the best. Best and stable are not the same. The most stable investment vehicle in terms of property type. Let me tell you why. Because in most recent history, Toronto condos have increased the least in terms of appreciation, while similarly, Toronto condos during the valleys of the market in Q4 of 2022 represented the least amounts of loss as well. I mean, all this is on record. I've been making videos on YouTube for 3 years. You can go watch me cover the videos where I say, once again, a surprise, not really. What has dropped the least in terms of average sold price, both in terms of dollar figure and percentage, always ends up being condos. And when the market was booming and peaking, what had increased the least and prices that had gone up the least were always condos as well. So condos, based on the figures, have shown to be the most stable. Once again, this is on an average basis. There is no doubt, and I have covered this as well, there are particular units that are selling for $100,000 to $200,000 less, or were selling for nearly $200,000 less in Q4 of 2022 as compared to Q1 of 2022. You can find all these examples, and I have covered it on my TikTok, Instagram, all these channels. But on an average basis, condos have been the most stable according to the numbers. And the reason being is because they're the most affordable option. Right now, population is greatly exceeding what housing supply exists within Ontario. Similarly, with the massive amount of immigration that is coming to the country of Canada, mainly obviously one of the hubs being Ontario and Southern Ontario, condos will remain to be the first foot through the door for a lot of first-time homebuyers. This provides condos as a property type a structural integrity in terms of support that is very strong. It's a simple law of demand. When prices of a given good are lower and lower, well, quantities demanded of that given good are higher and higher. You're always going to have more demand for properties that are priced less than demand for properties that are priced higher. That's just simple microeconomics. As a result, condos will always have that level of support. They're the first-time home buyer's option, even if they despise condos, even if they hate condos. They know, okay, for me to get my foot through the door, I have to at least purchase a condo. Once again, I'm not saying there aren't first-time home buyers that jump directly to a semi or a townhome or a detached. Clearly there are. But as long as condos remain the cheapest and most bountiful housing option for a lot of buyers, whether retirees or first-time home buyers or middle-class individuals, condos will always remain steady. As a result, I find it very hard to believe there is going to be any crash or collapse. Once again, is there going to be a correction? Well, this is where we're going to segue into the summer market. I think, as I said, answering the first question and the second question, seasonality has returned. Inventory is a driving factor. As we enter the summer, I foresee the summer market being less competitive because hopefully in the summer market, we're going to see an increase in active listing and housing inventory on the market. So prices, in my opinion, will decline a bit more in the summer. And it's just going to be as simple as that. There's also a possibility that the market is going to trade sideways for the next year to year and a half. There's undoubtedly going to be more rate hikes coming. We're entering into a recession if we're not in one already, but all this can mean a soft landing. Bankruptcy laws are not the same in Toronto and in Canada as they are in the States. And trading sideways can mean that we fluctuate around 5 to 7% either way for the next 2 years. A collapse or crash is not imminent. A correction is definitely plausible, but we cannot predict the future. And that was the point of the initial tweet in the first place. People who make a name and a brand out of predicting the future, whether you're a real estate bull or a real estate bear, well, those people should be ignored entirely. Take the numbers, take the facts on a weekly basis, on a monthly basis, and as always, consult a professional and make the best decision for you, because the best decision for you is not the best decision for someone else. As always, this is Sam from SaberiSixRealEstate and Remax Realty Inc. Thank you very much for watching. Stay safe and stay tuned. Thank you.